Yes, a very good morning to all of you. Right, so I hope the audio, video, it's all good at the onset today itself. Right, so no technical hassles today. Just wanted a confirmation from your side whether all is good. Right, all of you, yes, all there, sharp 9 o'clock. Right, ready to study ethics. Right, professional ethics, one of the most scoring chapter in the CA final audit paper. Right, so we'll quickly revise whatever we have studied yesterday, discussed yesterday, and then start with our discussion for today. Right, so all of you, just if you could confirm if everything is all fine. Okay, that's great. Right, so we started with our discussion trying to get an outline of the syllabus. Like, we have the 19 chapters given in the study material of the ICAI. So correspondingly, in our books also, we have the 19 chapters divided under the two modules, the module 1 and the module 2. Right, so module 1, you have chapter number 0 to 11. Like 0 is like the basic concepts and all of that, and the important terms and the list of standards. And 1 to 11 chapter is mainly regarding the 46 engagement and quality control standards. Right, so what did we say? The standards which have been issued by the AASB, that is the Auditing and Assurance Standard Board of the ICAI, are called as the EQCS. What is EQCS? Engagement and Quality Control Standards. Right? Engagement. So as a chartered accountant or as a practitioner or as a professional accountant, what are the types of engagements that you can perform? Yes, you can either do an audit or you can do a review, or you can provide an assurance service which is other than audit or review. So that is other assurance, or it could be the related services. Right? Accordingly, we have SA, that is standards on auditing, SRE, that is standards on review engagement, SAE, that is standards on assurance engagement, and then SRS, which is standard on related services. And whatever be the type of engagement you are performing, okay, whether you're doing audit or review or other assurance or related services, you always have to maintain the quality. So for that, we have SQC, that is standard on quality control. Right, so all these 5 varieties of standards put together, we have the 46 engagement and quality control standards. Right, so in the old syllabus there used to be 36, but now 10, which were applicable till May 19, have now been reintroduced into the syllabus. Right, so we have the 46 standards, and then 2 brand new chapters over there. We have, like I told you, the digital auditing and assurance. So earlier, in inter-audit also, you would have studied something called as the automated environment, but that now it has been upgraded to be called as the digital auditing and assurance. And another chapter that is added over there, new altogether, is the ESG and the SDG assurance. Right, that is the environment, social governance, and the sustainable development goals. And then we have the audit of banks and NBFC, public sector undertaking, due diligence, investigation, forensic accounting, group audit, that is the audit of consolidated financial statements, right? Internal audit, right? So those are a few of the other chapters which we also have. Okay, right, we've decided, like, the flow of the class is that we will begin with the last chapter first. Right, so beginning with the chapter number 19, which is on the professional ethics and the liabilities of the auditor. Right, so what if the chartered accountant does not behave professionally? What if he does anything wrong? So we said he could be guilty of the professional misconduct or the other misconduct under the Chartered Accountants Act 1949. Right, so we talk about the liabilities of the auditor under the Chartered Accountants Act 1949, wherein he would be guilty of the misconduct. And then I told you over there, we have the code of ethics, right? So members have to abide. Members means the members of the institute, right? Yesterday we discussed you could be an associate member or you could be a fellow member of the institute. So once your name is entered into the register of member, when you get your membership number from the institute, you become an ACA, that is an associate chartered accountant. And once you are in continuous practice for 5 years, or your experience is considered to be equivalent to that of being in practice for 5 years, though it is less than 5 years, then you could become a fellow member of the institute, that is a fellow chartered accountant. Right, so once you qualify, if you want to do a job, job, then you only need to get your membership from the institute. But if you want to practice, then you'll have to get your membership and also take a COP, that is a certificate of practice from the ICAI. Okay, right. So Chartered Accountants Act, we have the sections of the Chartered Accountants Act, and then we have the 2 schedules to the Chartered Accountants Act, right? The first schedule to the Chartered Accountants Act and the second schedule to the Chartered Accountants Act, in which we have to discuss the 34 clauses of ethics. But before we come to that 34 clause ka discussion, we have to discuss a few sections of the Chartered Accountants Act, right? So yesterday, like we started with, you know, the motto of ICAI, Esha Supteshu Jagarti, and why like ethics is necessary, because we said it's public interest and credibility on the work being done by CA. And then we took an overview of the code of ethics, that part 1 talks about the fundamental principles and the conceptual framework. Part 2 is for professional accountants in service, right, those who are working. Then part 3 talks about the professional accountants in the public practice, that is the practicing chartered accountants. And then you have the part 4A and part 4B. So part 4 is basically the independent standards, but we said independence when you're doing audit review, that is 4A, and independence when you're doing assurance engagement other than audit review, then it is 4B. Right, then in that case it would be 4B. Okay, right, then we started with our discussion on the fundamental principles, also called as the ethical requirements. So we have this very important term called as ERII. What is ERII? Ethical requirements including the independence, right? Can you shoot it on the the chat box? Okay, what are the fundamental principles? Right, because that's the fundamental, that's the base of ethics. Okay, why these ethics have been introduced? In order to ensure that there is compliance with these fundamental principles. And what are those? Yes, you remember how many are there? Okay, 5, which is the first one. Yes, good typing speed, khatakat, khatakat, tak, 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 tak. Right, with the correct spelling. Yes, something you can write in over there. Yes, it starts with, yes, the integrity, then, right, integrity, straightforward, honest and sincere. Then we talked about the objectivity, right, not to compromise on his opinion, no bias in forming of the opinion, no undue influence of others while forming the opinion, right. Then PCDC, that is professional competence and due care, attend and maintain, technically very razor sharp, and also do your work diligently, carefully, not in a haphazard or an unorganized manner. Wonderful. Then confidentiality, not to disclose the secrets of the client, present client, past client, future client, and prospective clients also, right? Not to disclose the secrets of the client unless required by law or taken the prior consent of the client, right? And then after that, the last one is professional behavior, that is avoid any behavior which might bring the I'm able to hear, bolo, which might bring the discredit, correct, which might bring the disrepute to the profession. Like you are saying exaggerated claims, disparaging references, some advertisements you are doing, it says, nahi, this is not the behavior of a professional chartered accountant. Okay, right, so those are the fundamental principles. What are those? Integrity, objectivity, professional competence and due care, confidentiality, and the professional behavior. Then, along with this ethical requirements, you also have to comply with the requirement of independence. An independence requirement of the auditor is non-negotiable. And non-negotiable, it's like, fixed price and a fixed. Independence ke liye we cannot have any dilution or any compromise when it comes to the independence of the auditor. Independence means that the judgment of a person is not subordinate to the wishes or directions of another person who might have engaged him or for his own self-interest. And what do we say? Independence is the keystone on which the respect and dignity of the profession is based. And what we want is independence not only of the mind, but also the independence in the appearance. Right? So you say, no, I know I am independent. So that is independence of mind. But the code of ethics says independence of mind. So yes, you should think in your mind that you are independent. But even a, yes, you know the word, you know the term, even the RITP, absolutely right. The reasonable and informed third party should also think that yes, this auditor appears to be independent. Even I would have taken the same decision which this auditor has taken for this particular company, right? So that is independence of mind and independence in appearance. Only when you have these both independence, then you will be able to maintain your integrity, objectivity, and your professional skepticism, right? Your integrity, objectivity, and the professional skepticism, right? So as an auditor or as a chartered accountant, whether you are in practice or whether you are in service, you have to maintain the independence. So how to check, okay, whether I as an auditor, whether I am independent or not? How to check? Yes, tell me the word. Tell me the word. How to check? Keep the hand on the keyboard only. It's like faster swinger first. Tak, 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 tak. Yes. How to check? Independent hai ya nahi hai? Yes. Whether independent or not? Yes, exactly. You need to check whether there are any identify. You know, we said the first, what is it? Identify whether there are any threats to the independence of the auditor. THREATS, right? Whether there are any threats to the independence of the auditor. Is there any khatra, any dhoka, any danger to the independence of the auditor? Right. So threats, we first have to identify the threat, right? So threat, what did we say? There are the 5 types of threats to the independence of the auditor. What are the 5 types of threats? You say, ma'am, all of a sudden, where does your voice go? So I'm listening to you. I want you to say, right? If you're doing your classes, your home, then after the class, your family members should ask you, whom are you talking to? What you are answering to, right? So everybody at home should be able to listen to you, right? So yes. It could be the familiarity threat. It could be the, yes, FSSAI, right? The self-interest threat, the self-review threat, the advocacy threat, and the intimidation threat. It's the self-interest. You could have a financial interest or an employment interest or a fear of losing the client or a close business relationship with the client, right? Then after that, the self-review threat, wherein the maker-checker concept is getting violated. Okay, you only designed the system and now you are only doing the audit of the system, right? So that is the self-review threat. Then you have the advocacy threat. That means you are in favor of the client. You're advocating on behalf of the client. You're promoting the shares. You're handling litigations. You're lobbying in favor of the client, right? So that's the advocacy threat, right? Then after that, we have the the first one was the familiarity threat. What is the first one? Familiarity threat. So you're having a long association with the client. You're too sympathetic to the client, or you're accepting a lot of gifts or hospitality from the client. So that's the familiarity threat, right? And the last one is the intimidation threat. The client is threatening you. Okay, we will file a case against you. We will reduce your audit fee. We will limit the scope of your work. We will change the auditor next year. We will replace the auditor, right? So all these are what? These are the threats to the independence of the auditor. FSSAI. Yes, familiarity threat, self-interest threat, self-review threat, advocacy threat, and the intimidation threat. Right. So first step, what you have to do, you have to identify the threat. Then once you identify the threat, next what you need to do? Eat it. Right, eat it. Yesterday we said no, evaluate, address, and then safeguard. You remember we had written independence threats. From that we take identify, evaluate, address, and safeguard. Right. So next what you do, you evaluate the threat. Yes, what you do, you evaluate the threat. That means you check whether the threat is at an acceptable level. How you check whether it is at an acceptable level? Again, by doing the RITP test, right? Checking with the third party, the reasonable and informed third party, that whether the threat is at an acceptable level. If it is at an acceptable level, finish, no problem, you can continue with the engagement. However, say it is not at an acceptable level, then now what you need to do, you need to address the threat. And now what you need to do, you need to address the threat. So address the threat, what you need to do, you need to put the safeguards, either to reduce the threat or you either need to eliminate the threat. right? So either you eliminate the threat. That means if I am holding one share, I sell off that share. So I have eliminated the threat. Or my relative is holding share of 1,20,000. I told them sell shares of 20,000. So what happened? The threat is reduced. Right? So eliminate or reduce. To reduce, you have to put the safeguards. And if you are not able to eliminate, you're not able to reduce the threat, then what does it say? Decline or end. If you've not yet accepted the engagement, decline. And if you've accepted the engagement, end it. End it means withdraw. That means resignation of the auditor. Right? The auditor needs to resign from the audit. Are you understanding that? And then to address the threat, we said you need to reduce the threat by applying the safeguard. Right? So what safeguards you could apply? Right? Putting additional time, more qualified personnel on the assignment, separating the teams which are providing the consultancy services from the team which is doing the audit work, putting a reviewer apart from the members of the engagement team, involving another firm of CAs in doing the audit. Right? Separate rotation of the team members, right? So these are the safeguards which you can put in order to ensure reduce the threat to the independence of the auditor. Right? So all good. And then when we discussed the 5 types of threats, we studied the examples of threats for CA in practice and CA in service. Like while doing a professional service for a CA in practice and while doing a professional activity for a CA in service. Right? So this is what we had discussed, right, regarding the ERII, that is the ethical requirements including independence. Please don't forget that the moment I talk about the word independence, the next term coming to your mind has to be threats. It has to be threats. Okay, you make it like A for apple, like independence is equal to threats. Like that, fit into your mind, because then you will be able to write down the points regarding the independence. Right? Clear to all of you? Okay. Right. Then after that, we started a further discussion. Okay, when will your name be entered into the register of member? Then associate chartered accountant and the fellow chartered accountant. And then I also showed you the membership fees which you need to pay to ICAI. And then we talked about the disabilities for membership. Okay, when your name will not be taken in the register of members. They will not allow your entry in the register of members. When they will not allow? If you have not cut the cake of your 21st birthday, right? Right? So age less than 21 years. Then second one, mind is like how it is. How is the mind? Unsound mind. And who is saying that? Court, and stands though adjudged by a competent court. Third one, undischarged insolvent. Insolvency proceedings are going on. Fourth one, discharged insolvent, but who's not obtained a certificate from the court that his insolvency was caused by misfortune without any misconduct on his part. And last one, convicted for an offense involving the moral turpitude, which is punishable with imprisonment. Right? Or any of them, it says guilty of professional or other misconduct by the ICAI, the Council of the ICAI. Right? So if these should not be attracted on the day when your name is being entered into the register of member, and any of them getting attracted after your name is entered into the register of member, then your name would be removed from the register of the members. Even if you don't pay your annual membership fees, then again your name could be removed from the register of members. Then later on you pay the additional fee, the entrance fee, your annual fee. Then your name will be restored into the register of members. Right? Then your name will be restored into the register of members. Okay. Right. So are we good? Right, so this is the pattern we'll follow every day. We will do a revision of whatever we discussed the earlier day, and then we proceed with our discussion for the next day. Right, now a sound mind agar hai, so you are allowed to become a member of the institute, but unsound mind hai to nahi, not allowed. Okay, right. So unsound mind, undischarged insolvent, discharged insolvent, not obtained certificate, convicted for an offense, guilty of misconduct, professional or other misconduct. Right, so amazing, good typing speed. Okay. Right, all good everyone? Yes, let's continue with our discussion, right, regarding the ethics. Right, let's continue.